Hello to all traders and welcome to another edition of Stockwatch. This has been brought to you once again by Orbex. The Dow, the S&P and the Nasdaq all pushed higher, and this is quite significant, especially for the Dow. It held the 33,000 handle because after an 8-week losing streak, which hasn't been seen in decades, we saw another push to the upside. On the daily chart at the moment, we're seeing a slight downside risk momentum as the market has opened this morning. However, if that 33,000 handle is kept, we are looking at the fact that psychological handles come into play when we are looking at price movements, support and resistance levels. You always look for those kind of main round figures. So if it's a euro dollar, you look at 110, let's say, as an example. If you look at the Dow, you're looking at these 34,000 handles. If you look at gold, you're looking at the 1900 handle or the $2,000 handle. So for the Dow at the moment, we're just seeing if it can keep that 33,000 psychological handle to the upside, and then bulls should be in for a bit of a treat as this rally continues to push higher. So let's get right into the charts then. I've pointed out the 33,000 handle just to have a bit of significance here, and as you can see here, after this detrimental downturn, as I said, an 8-week losing streak for the first time, I believe it's since 1923, we are now looking at a full recovery. So this V-shaped recovery is kind of taking momentum at the moment. We are starting to see a possibility that prices will get back above 35,000 at least, and then start moving to these other fresh highs that we saw not so long ago. So with that being said, now we are halfway through this V-shaped recovery, and can we go all the way and move to the upside? Well, if we're looking at divergences on the RSI, there aren't really that many to start worrying about at the moment for another move to the downside. However, with these daily green candles being formed, so 1, 2, 3, 4, 5, 6, 7 progressive candles for the Dow after the downside that we saw, will we see the 8th one being into place today? Well, if we look on the 4-hour chart, it gives us a little bit of a move. I'll just remove these drawings for you. So it gives us a bit of momentum shift at the moment, because as I said, at the moment we have actually started on a slight choppy downside movement. However, this could be just a slight correction before we start moving higher. So if we look at the RSI on the 4-hour chart as well, we are slightly overbought here, so it was more than likely we were looking for a slight correction. However, how long this correction will last for, we'll have to wait and see as we go into the day when the American market opens as well. Obviously, Memorial Day yesterday, like I mentioned, things were very slow in the market. However, we still got a few rallies in certain points. And speaking of rallies, let's just look at the S&P as well. We'll bring it back on the daily chart so it's just a little bit easier to see. We had actually a jump in prices. If you see, there's a slight gap here to the upside. So now we're just looking to see if this is an exhaustive gap, or if we're looking to see if it's going to start moving higher as well. So if it's exhaustive, we could now see a slight move to the downside, but all indications are looking that it is trading to the upside. We've got quite a bit of leeway to go before we reach the bottom border of the Ichimoku cloud. This is where we get some good signals. However, we are now looking very, very bullish. We are in a bit of a bull market. If again we look on the 4-hour chart, just remove these so it's easy to see, we are now seeing at the moment day by day if we're going to start moving higher, and if it's going to start being very progressive as well. So as I say, when the market is really in full flow, we'll see if that's going to come into fruition. But we are now seeing the injection in the Ichimoku cloud for the S&P, which is a good move because it is looking very bullish. Again, looking at this V-shaped recovery, I've gone off a little bit there, but you get the general idea. With when markets do start recovering, we always look at these break points to see if the market is going to start pushing higher or lower, depending if you're a bull or a bear, if you're looking for the market to retrace or to start moving higher. So just keep an eye on the comings and goings for the US indices in the next few days. As I said on the video yesterday, you've got the NFP coming up. It is supposed to be a little bit subdued from the last numbers of 428,000 new jobs added, but still it is supposed to be a progression. 350,000 consensus at the moment, but as I said, it is looking still to be in positive territory rather than negative, and we'll see what the inflation rate is going to have any effect on job numbers going into the yeah, the second year. I mean, we've got, sorry, the second part of the year. We're going into June now, not far off to finish in the first half and the second quarter of the year. So we'll see what's to come in that respect. So thank you very much for joining me once again. This video has been brought to you by Orbex. Please make any comments that you want to on the YouTube channel. I'm happy to answer any questions you may have and any possible scenarios and opportunities in that respect. So until then, we'll speak again tomorrow. Bye for now.